I think new car dealerships are in crisis and what you need to know about it.
Some serious movement underway in the used car market, prices finally dropping in for the first time since the pandemic.
Over the past 3 years, we have witnessed the unprecedented growth of a car price bubble, which is now on the brink of collapsing according to experts. The market has been flooded with an excessive supply of cars, coinciding with a significant decline in consumer demand. As a result, the inflated prices we have seen for both new and used cars are no longer sustainable. The collapse has already begun, as evidenced by substantial price declines for certain models in 2023. We have compiled revealing data and brutally honest forecasts about the unfolding auto market crisis. However, before we delve into this topic, let's examine the events leading up to this situation. For more than 2.5 years, the average prices of new and used cars consistently rose, bolstered by dealer markups. Limited availability of semiconductor chips hampered production, while demand continued to outspace supply, keeping vehicle prices at record levels. However, the current landscape has dramatically shifted. Microchip shortages have eased, leading automakers to increase production in order to maximize profits and meet consumer demands. It is highly likely that we have already reached the peak of prices, but the descent we have witnessed so far pales in comparison to what lies ahead. Wholesale prices across the country are declining, with experts at Mannheim Consulting estimating a 9% drop for new models and a staggering 26% decline for used cars. As wholesale prices sink over time, retail prices will subsequently decrease. In April, for the first time in 20 months, the average price of a new car fell below the sticker price. Their data also reveals that the excessively high prices we have witnessed are no longer sustainable. Between January 2021 and January 2023, used car prices rose by an impressive 52%, while new car prices increased by almost 28%. Meanwhile, the median household income in the US only saw a 13% increase, which does not account for inflation. In reality, we have only witnessed a meager 7.1% increase in incomes. Consequently, in the past few years, the affordability of used cars has declined by nearly 40%, while new cars have become 15% less affordable, without factoring in inflation. In such a market environment, where buyers are being priced out on a large scale, a crash is inevitable. The only question remains as to when it will occur. We are being informed that the impending collapse will surpass anything we have ever witnessed, even surpassing the severity of the auto market crisis in 2008. Easing supply chain pressures have contributed to the repopulation of inventory. However, we are transitioning from a state of severe supply shortages to an excess supply of vehicles. A recent report from UBS estimates that global car production will exceed sales by 6% this year, resulting in an excess of 5 million vehicles that will require price reductions to be sold off dealership lots. Yahoo Finance reported that automakers are already gearing up for a price war, with some of them slashing prices. Given the optimistic production schedules, there is a high risk of overproduction and increasing price pressure, as highlighted in a note to clients by UBS. The price war has already commenced, particularly in the EV space or electric vehicles, and we anticipate it spreading to the combustion engine segment in the second half of 2023. An evident example of this is Tesla's recent price cuts for its new cars. The value of the Model X has plummeted by over $14,000 or 23% since the beginning of the year. Even the prices of used Tesla Model 3 vehicles are experiencing a downward trend, with their average price dropping from $51,251 to $39,976 last month, according to iCars.com. Similarly, in 2022, the average price of a used Infiniti QX80 was $52,874. However, just 1 year later, the average price of this large Infiniti SUV on the used market has dropped significantly, reaching the average of $41,094 in April. This marks a substantial 22.3% plunge. Nissan's counterpart to the Infiniti QX80, the Armada, has also experienced a notable price decline this year. While the used version typically cost $41,771 last year, current reports indicate that used versions of Nissan's full-size SUV have an average price of $33,000, representing a 20.3% decline. Furthermore, used versions of Land Rover's mid-size Discovery SUV now carry an average price of $40,841, according to researchers. Comparatively, 1 year ago, a used Discovery had an average price of $50,973, indicating a decrease of 19.9% thus far. Several other popular models are expected to undergo significant price reductions in the used car market. For instance, the new Nissan Frontier, which currently costs around $39,833, is projected to drop to $27,146 by the end of 2023. Researchers predict even higher volatility in the used car market. They anticipate a 3-year-old Toyota Camry, currently selling for $27,404, to decrease in price to $16,548 by the end of the year. The same trend applies to popular used SUVs such as the Jeep Compass, which is expected to see a decline from $25,605 to $15,706. The Honda CR-V from $30,193 to $19,599, and the Toyota RAV4 from $32,056 to $20,534. For individuals who recently purchased one of these used models, the outlook moving forward does not offer any relief. While the corrections in the market so far have been significant, it is crucial to acknowledge that used vehicle values have skyrocketed by an astonishing 88% since 2020. Additionally, when consumers drive a car off the dealership lot, an immediate loss of 10 to 20% of the car's value occurs, further exacerbating their losses. Chris Frey, a senior manager of economic and industry insights at Cox Automotive, believes that the decline in prices will continue. He draws a parallel to the financial crisis, during which there were 16 months of annualized declines averaging 5.8%. According to him, the current situation is very consistent with that period. Both new and used car prices are likely to continue declining throughout most of 2023. As concerns about the supply chain ease, Goldman Sachs economists predict that vehicle prices will decline for consumers. Thank you for joining us in this eye-opening discussion on the current state of the auto market. As we've explored, the unprecedented rise in car prices over the past few years has set the stage for an imminent and severe crash. If you found this video informative, please like, share and subscribe to our channel for more updates on the auto market and other pressing topics. Thank you for watching and stay prepared as we brace for the worst car market crash in our lifetime.